The rumour mills are in full force for this year's autumn budget, and the reasons for this are clear. The state of the British economy is not looking good.
Today, 1 in every £10 of taxpayers' money is spent on debt interest.
It is perhaps the understatement of the year to say that many people are worried at this moment in time, and the endless rumours don't help. So how do you make sense of the noise? My name is Ruzwan Boota and I'm a chartered tax advisor, and in this video I'm going to explain the 5 hottest rumours and what they mean for you and your family. So let's jump straight into it. The first one is an increase in income tax. In the pre-budget speech, Rachel Reeves refused many times to rule out an increase in income tax rates, something that they promised in the pre-election manifesto. Also, when addressing how the government will help get national debt under control, the Chancellor said,
If we are to build the future of Britain together, we will all have to contribute to that effort.
Now, when you think of a tax that impacts the most people in the UK, it's income tax. It is being rumoured that income tax will rise for each band by 2%, which in all honesty is a huge hit on its own. But on top of that, people often forget, and it goes unnoticed, that there's a stealth tax in the background, and that is the freezing of the income tax thresholds. Now, to put into context just how sneaky this is, let me show you something. Now, let's say that you're earning £48,000 and you're going to your boss to ask for a pay rise purely to stay in line with inflation. By getting a pay rise, you will now go into the high rate tax bracket if you go over the £50,000 mark. Now, normally you would expect that the tax threshold will rise with inflation as well. But that's the problem. They've frozen it, and they've frozen it for many years. So now you're ending up in the high rate tax bracket, paying more tax, even though you only asked for a pay rise just to stay in line with inflation. In an article released by the OBR in November 2023, the OBR estimated that the income tax threshold freezes alone will raise £42.9 billion by 2027-2028. So now imagine having the threshold freeze combined with an income tax rate increase by 2%. This is going to have a huge impact on families right across the UK. Now, the second one, NIC changes for partnerships. Doctors, lawyers and accountants are often members of partnerships and LLPs, and as a result, they are not treated as employees, and so there are no 15% national insurance contributions on the profits that are extracted. This creates a big tax saving for them. The Times have reported that Rachel Reeves is considering changing this, and it could raise £2 billion for the Treasury. Now, at a time when people are already feeling the pinch, this is really going to impact those operating as partners within partnerships. For many of them, there's a very easy solution. Incorporate that partnership into a limited company and extract the profits as a dividend, which is not liable to any national insurance contributions. For many, this is completely fine. But for many doctors, this simply isn't an option. There are many restrictions and regulations governing medical practices. And for many, it would mean losing GMS contracts and, more importantly, losing their NHS pension. As a result, many doctors keep themselves structured as partnerships for this very reason. Not being able to incorporate like many lawyers and doctors will leave doctors taking the majority of the hit on this one. More hours, less pay, and unfortunately, much more tax. National insurance contributions on rental profits. Now, landlords are really not going to like this one. For many years, they've been feeling the brunt of so many tax changes that have really impacted them. And unfortunately, this is only going to take it further. There is talk that the government may extend national insurance contributions so that it now applies to rental profits from properties. Now, there are 2 concerns from my side. First is that there's clear correlation between rising tax on landlords and rising rental charges. Increasing tax on landlords means that tenants are going to feel the brunt of the impact, as the increased taxes will be passed on to them in the form of increased rent charges. And secondly, since 2016, landlords have been falling over themselves to try and get to the promised land of the limited company and taken huge risks with circumspect tax planning to try and achieve that, leaving landlords and their families to pick up the pieces and, unfortunately, the HMRC inquiries. Beware, guys. Please make sure you're not falling for the dodgy tax advice. Number 4, new council tax bans. The FT has reported that Rachel Reeves is planning a budget tax raid on the owners of expensive homes, and this is expected to raise circa £4 billion. And this will be in the form of increased council tax bills for those in the 2 highest bands. Now, if I asked 100 people across the UK, what is your definition of an expensive home? I can guarantee you I will get 100 different answers from people right across the UK. But how have the government defined it? By increasing council tax for the highest 2 bands, they are essentially going after homes valued over 750k. For those living up north, you may define that as an expensive home. But those living in London definitely don't. Now, if you type in on Google, the average house price for a 3-bed house in London, this is what you get. So if you're an average person owning an average 3-bed semi-detached property in London, congratulations. You have been classed as a rich person by the government. Oh, and also congratulations, here's an increased council tax bill. So before you start celebrating that the rich are getting taxed more, ask yourself that question: who are the government classing as the rich? And number 5, pension tax relief changes. Ahead of every single budget, there is always a rumour about pension tax relief changes. The annual cost of providing tax relief on pension contributions is 45 to 50 billion pound. So it's only natural that the government want to tackle this. But successive governments have decided not to touch this. Why? Because they're recognising that people simply aren't saving enough for their retirement. The government recognises that they need to get the cost of pension tax relief under control. However, at the same time, they need to continue encouraging people to save for their retirement. It's a tricky one, to be honest, I must admit. But there's one rumour that's flying around that they could likely charge a small levy on pension funds going forward. Therefore, the encouragement of saving for your pension will be there immediately in the form of pension tax relief. But in exchange, there will be tax charges tomorrow. I think this is a clever idea, to be fair, because the incentive is still there to save via their pension, but will still raise billions for the government. Think about it. When was the last time that you checked your pension statement, let alone looked at the charges? So those are my thoughts on the 5 hottest rumours for this year's budget. But trust me, there are many, many more. So we now just need to wait and see what is going to be announced in the autumn budget on the 26th of November. You'll be glad to know that we will be releasing an immediate reaction video straight after the budget. So don't forget to subscribe so that you can be notified when the video is released. Assalamu alaikum.